The internet changed how we communicate. Social media changed how we connect. Smartphones changed how we live. But the next revolution won't just touch our screens. It will reshape the foundation of the global economy itself. That revolution is tokenization. For centuries, wealth has been locked inside paper systems, stock certificates, property deeds, bond ledgers, complex contracts filed away in vaults and banks. Even in our so-called digital world, most of these assets are still moving on rails designed decades ago. Settlement takes days. Errors and fraud run rampant. Middlemen eat up fees at every step. It's an outdated system, and it's breaking under the weight of modern finance. Global trade moves at the speed of the internet, but money and assets crawl like it's 1975. That mismatch is about to be shattered, because just like the internet digitized information, tokenization will digitize value itself. So what does tokenization mean? It means taking anything of value, a share of stock, a government bond, a piece of real estate, even a barrel of oil, and representing it as a digital token on a blockchain. A token that can move instantly, transparently, and securely across borders. A token that settles in seconds instead of days. A token that can be traded as easily as sending an email. This isn't science fiction. Analysts estimate that by the end of this decade, over $100 trillion in assets could be tokenized. Stocks, bonds, commodities, real estate, intellectual property, even the carbon credits that power climate policy. The entire financial system is preparing to move on-chain. And when it does, nothing will ever be the same. But here's the problem. Just like the internet needed protocols to connect networks, tokenization needs rails to connect value. Right now, projects are scattered. Different blockchains, different standards, different nations building their own systems. Without a universal bridge, the system fragments into silos. And that's not a revolution, that's chaos. That's why the missing piece isn't just tokenization itself, it's interoperability. The ability to move tokenized assets seamlessly between banks, blockchains, and borders. The world doesn't just need tokens, it needs a bridge. And this is where the story turns. Because while the world chases headlines about Bitcoin ETFs and meme coin pumps, one digital asset has been quietly positioning itself for this exact moment. An asset designed not for hype, but for plumbing. An asset built for speed, scale, and neutrality. That asset is XRP. Unlike speculation-driven cryptos, XRP was engineered to settle value. To move money, assets, and liquidity in seconds. To connect fragmented systems into one seamless network. Neutral. ISO 2022, ready. Already tested in banking corridors and institutional pilots. In other words, XRP isn't chasing the tokenization wave. It's standing at the center of it, ready to act as the universal bridge. And that's what this series is about. Because the 100 trillion shift isn't coming in theory, it's coming in reality. Paper wealth is ending. Tokenized wealth is rising. Institutions are preparing. And XRP is aligning itself as the hidden backbone of it all, so buckle up. Because in the chapters ahead, we'll break down the death of paper wealth, the $100 trillion tokenization opportunity, why XRP is perfectly built for it, how institutions are already moving, and what the future of a fully tokenized world looks like. This is the next great story of money. And when history looks back, they may not remember the paper, the delays, or the inefficiencies. They'll remember the moment we left it all behind. This is LTL Productions, and you're watching the tokenization of everything. Part 1, the end of paper. Wealth for centuries, the global financial system has been built on paper. Stock certificates, bond notes, real estate deeds, shipping contracts, trade bills, all physical documents stored in vaults and shuffled between banks. Even as we've gone digital, most of these systems are still running on paper-era rails. And those rails are crumbling under the weight of modern finance. Outdated systems in a digital world, think about it. In an age where emails arrive instantly and data travels at the speed of light, stocks and bonds still take 2 days to settle. Real estate ownership can take weeks to transfer. Trade finance involves mountains of paperwork, notarizations, and manual verification. Even cross-border payments crawl through a maze of intermediaries. This isn't just inefficient, it's dangerous. Delays mean risk. Fraud slips through cracks. Entire economies are slowed by outdated systems that no longer match the pace of global commerce. The financial world is operating on 20th century plumbing in a 21st century economy. Viewing the cracks in paper wealth. The weaknesses are everywhere. Settlement delays. Billions locked up in clearinghouses while transactions crawl through reconciliation. High costs. Every middleman takes a cut. Brokers, custodians, clearing firms. Lack of transparency. Paper trails create opacity, making fraud and errors harder to detect. Limited access. Entire populations are excluded because paper-based systems don't scale globally. And when cracks appear in systems built on paper, they spread fast. Just look at the 2008 financial crisis. Toxic mortgage contracts were bundled into paper-backed securities, and no one knew where the risks actually lived until it was too late. History repeats. History tells us that money and value have always evolved with technology. Gold was too heavy to move, so paper money replaced it. Paper itself became too slow, so digital databases replaced ledgers. But even digital databases are just glorified paper records, slow, centralized, prone to error. We're at the tipping point for the next leap. Just as paper replaced gold and databases replaced ledgers, tokens will replace paper. Curious why paper must die? Here's the truth. Paper wealth is incompatible with a globalized digital-first economy. Global trade moves at internet speed. Paper moves at filing cabinet speed. Investors demand transparency. Paper hides risk. Institutions need efficiency. Paper breeds cost. It's no longer a question of if paper wealth will be replaced. It's only a question of what replaces it. On the path to tokenization, enter tokenization. Imagine every asset, stocks, bonds, commodities, real estate, represented as a digital token on a blockchain. Ownership verified instantly. Settlement final in seconds, transparent, efficient, and global. Tokenization takes the inefficiencies of paper and erases them. Settlement speed, no more T+2 delays. Assets settle instantly. Transparency. Every transaction recorded on-chain, auditable in real time. Accessibility. Assets can be divided into fractional tokens, opening markets to millions who could never participate before. Global flow. Value moves across borders seamlessly, without being trapped in one jurisdiction. This isn't about small improvements. It's about completely replacing the infrastructure of wealth. The big picture. The end of paper wealth is more than modernization. It's survival. Just as nations abandoned the gold standard when it became unsustainable, the world will abandon paper systems because they no longer work. The inefficiencies are too large, the risks too high, the costs too punishing. And in their place, tokenization will rise. A system where value flows digitally, instantly, and globally. But here's the kicker. Replacing paper is only the first step. The real story is about scale. Because when the world moves beyond paper, it doesn't just digitize billions, and it digitizes trillions. Stay tuned for part 2, where we dive into the 100 trillion tokenization opportunity and why. This may be the biggest financial shift in human history. Part 2, the $100 trillion opportunity. When we talk about financial revolutions, most people think small. They picture faster apps, new wallets, or shinier payment systems. But tokenization isn't about convenience. It's about rewriting the foundation of value itself. And the scale we're talking about isn't billions, it's trillions. The size of the prize analysts estimate that by 2030, between 100 trillion and 150 trillion in assets could be tokenized and moved on-chain. To put that in perspective, the global stock market is about $100 trillion, global bonds add another $130 trillion. Real estate worldwide? Over $300 trillion. Commodities, derivatives, and other instruments push the total even higher. Not all of that will move overnight. But even a fraction, 10%, 20%, 30%, represents tens of trillions of dollars shifting from dusty ledgers into digital tokens. This isn't another tech trend. This is the largest transfer of wealth in human history. Breaking down the assets. So what gets tokenized? Pretty much everything. Equities. Stocks represented as digital tokens settle instantly, cutting out middlemen. Bonds. Government and corporate debt can trade 24/7, not just bankers' hours. Real estate. Property deeds split into fractional tokens, opening global investment access. Commodities. Oil, gold, wheat. Tokenized for transparent real-time trade. Intellectual property. Music royalties, patents, even brand rights represented as tradable tokens. Carbon credits, already moving toward tokenized markets as governments push green agendas. Each of these markets is worth trillions on its own. Tokenized together, they form a digital financial ecosystem larger than anything we've ever seen. Now, historical parallels, think about how massive shifts have happened before. The printing press democratized knowledge. The internet democratized information. Tokenization will democratize ownership. Before the internet, information was slow, costly, and controlled by gatekeepers. Now anyone can share data instantly, for free, across the globe. That's exactly what tokenization promises for finance. Instant, borderless, accessible ownership of value. Why now? Why is tokenization finally possible? Blockchain rails. Mature enough to handle global transaction loads. Institutional interest. BlackRock, JPMorgan, Citi, and others already piloting tokenization projects. Regulatory clarity. ISO 2022 and digital asset frameworks providing structure for adoption. Global need. Paper systems are too slow, opaque, and exclusionary to support modern finance. The world has reached a breaking point. Old systems no longer scale. The timing for tokenization couldn't be more urgent. XRP's role in the 100 trillion shift here, as the twist most people miss. Tokenization alone doesn't have to solve everything. Tokens can exist, but they need liquidity and interoperability. A stock token in New York needs to talk to a bond token in London, which needs to settle against a digital euro in seconds. Without a bridge, tokenization becomes fragmented. That bridge is where XRP comes in. Built for settlement, fast, cheap, and neutral, XRP doesn't just fit into tokenization, it makes tokenization work. Imagine trillions in tokenized assets all moving across rails that need instant liquidity. XRP is designed to be the universal connector. The hidden urgency right now, most people don't realize this shift is already starting. Tokenized treasuries, tokenized carbon credits, real estate pilots. It's not tomorrow, it's today. And just like the early internet, the numbers look small now. But when adoption hits scale, growth becomes exponential. By then, the infrastructure will already be in place. The institutions will already be positioned. And the bridge assets, and like XRP, will already be indispensable. For the big picture, this isn't about hype. This isn't about speculation. This is about a $100 trillion transformation of finance itself. Every major asset class digitized, every market tokenized, every barrier removed. The opportunity is massive, but it raises a bigger question. What assets, what blockchains, and what digital currencies are actually built to handle it? Most weren't designed for settlement at scale, but one was, and that's XRP. And stay tuned for part 3 on where we break down exactly why XRP is built for tokenization and how it could become the invisible backbone of the 100 trillion shift. Part 3. Why XRP is built for tokenization. By now, we've seen the cracks in paper wealth. We've seen the scale of the $100 trillion tokenization wave coming. But the big question remains. When the world finally moves its assets on-chain, what technology actually holds it all together? Because here's the truth. Most cryptos weren't built for this. They were designed for speculation, for experiments, or for niche use cases. But tokenization at scale demands something different. It demands speed, efficiency, neutrality, and liquidity. And that's why XRP stands apart. Engineered for settlement. From the beginning, XRP was designed with one mission: move value fast. Speed. Transactions settle in 3 to 5 seconds. Scalability. The XRP ledger can handle thousands of transactions per second without clogging. Cost. Fees are fractions of a cent, making it viable for both billion-dollar trades and microtransactions. Finality. Once settled, it's done. No rollbacks, no pending transactions. This isn't just convenience, it's critical infrastructure. In a tokenized system, trillions of dollars in assets will move constantly across borders. Settlement has to be instant and reliable. XRP is one of the few assets already proving it can handle that load. But the bridge asset tokenization creates efficiency inside a market. But the real challenge is between markets. A tokenized bond in Europe needs to settle against a tokenized commodity in Africa. A digital euro needs to exchange with a digital dollar in seconds. Without a universal bridge, these systems fracture into silos. That's not tokenization, that's fragmentation. XRP solves this with its core role as a bridge asset. Neutral, borderless, able to provide instant liquidity between any two tokenized assets or currencies. Whether it's a stock token, a real estate token, or a central bank digital currency, XRP can connect them all into one seamless network, the institution. Ready by design institutions don't care about hype coins. They care about reliability, compliance, and integration. XRP was built with those demands in mind. ISO 2022. Alignment. XRP is already compliant with the messaging standard banks are adopting globally. Low energy use. Unlike proof-of-work assets, XRP's consensus model is efficient and eco-friendly, matching ESG requirements. Neutrality. XRP isn't tied to one country or one bank. It isn't the dollar, the yuan, or the euro. It's neutral infrastructure. This neutrality matters. In a world where every nation wants control, XRP works because it doesn't belong to any of them. Beyond CBDCs, most people think about tokenization in terms of CBDCs. But the XRP ledger can issue and track any asset, from stocks and bonds to commodities and even NFTs. That means XRP doesn't just connect digital currencies, it connects everything. Tokenized equities can trade globally. Tokenized real estate can be fractionalized. Tokenized carbon credits can be verified instantly. All of it can be settled against each other, with XRP as the bridge. This makes XRP not just a currency, but a universal settlement layer. The liquidity multiplier. Here's the hidden power. Tokenization creates liquidity, but liquidity needs flow. XRP provides that flow. Every time assets are exchanged, every time a trade crosses borders, every time a tokenized bond settles against a tokenized stock, XRP provides the bridge. And in a $100 trillion system, even a small share of that flow means massive demand for XRP. Not because people are speculating, but because the system itself requires it to function. The big picture XRP isn't a meme. It isn't hype. It's plumbing. And in the world of tokenization, plumbing is everything. Most cryptos can't handle the speed, scale, or neutrality required for a fully tokenized economy. XRP was engineered for it. That's why it's already being tested in institutional corridors. That's why its alignment with ISO 2022 matters. That's why when tokenization hits scale, XRP won't just participate, it will be indispensable. Then what comes next, but here is the twist. XRP doesn't have to wait for tokenization to become real. Institutions are already moving. BlackRock, JPMorgan, Citi, and others are piloting tokenization projects today. Ripple itself is working with partners across finance to prepare for the shift. That's what we'll explore in the next chapter, the institutional gold rush. Because while retail traders argue over meme coins, Wall Street is already building the rails of tokenization, and XRP is right there in the middle of it. But stay tuned for part 4, where we uncover how the biggest players in finance are already racing into tokenization, and why XRP is set to ride the wave from day one. Part 4. The institutional gold rush. When revolutions begin, they don't start with the crowd. They start with the insiders, the players who see the future before the rest of the world catches on. And that's exactly what's happening right now with tokenization. While retail investors are distracted by meme coins and short-term pumps, the world's largest financial institutions are quietly preparing for the biggest shift in history. Call it what you want. The tokenization of everything. The 100 trillion transformation, the financial internet. The bottom line is this, as Wall Street isn't waiting, it's already moving. The biggest names in finance look at the players. BlackRock, the world's largest asset manager, controlling over 9 trillion, is piloting tokenized funds. CEO Larry Fink has openly called tokenization the next generation of markets. JPMorgan, testing its Onyx blockchain for tokenized deposits, collateral, and payments, already handling billions in pilot transactions. Citibank, publishing research that tokenization could represent a $5 trillion market by 2030, calling it an Internet of Value. HSBC, Goldman Sachs, Fidelity, each running tokenization experiments in bonds, real estate, and commodities. This isn't speculation. These are the giants of finance, and they're building tokenization rails now. Why care institutions don't move for hype. They move for efficiency, scale, and profit. Tokenization offers all three. Efficiency. Trades that once took days now settle instantly. Scale. Tokenization opens global liquidity pools, reducing fragmentation. Profit. Lower costs, faster turnover, and new products mean bigger margins. For banks and asset managers, tokenization isn't just innovation, it's survival. If they don't adapt, they risk being left behind in a system that moves faster than their old infrastructure can handle. Where XRP fits, here's the twist. Tokenization alone isn't enough. Each bank can tokenize assets on its own blockchain. But those blockchains don't automatically talk to each other. That's where XRP becomes crucial. Ripple has already positioned XRP as the bridge asset for interoperability. Tested in corridors across Asia, the Middle East, and Europe, XRP proves that it can settle value between banks instantly. Now imagine those same corridors expanded, not just for currencies but for tokenized assets. A tokenized bond on JPMorgan's system. A tokenized commodity on HSBC's rails. A tokenized euro from the ECB. Each needs a bridge. And XRP is designed to provide it. The quiet accumulation. While institutions experiment, something else is happening behind the scenes. XRP supply on retail exchanges is shrinking. Coins are moving into custodial vaults, institutional cold storage, and private settlement systems. This isn't flashy. It isn't hyped. It's accumulation. The kind of slow, deliberate positioning that happens before explosive shifts. By the time the public realizes what's happening, institutions will already control the rails and the bridge assets that make them run. As history repeats, think about the internet. In the 1990s, while most people were still dialing up, corporations and governments were laying fiber optic cables and building server farms. By the time the masses caught on, the infrastructure was already in place. The same pattern is playing out now with tokenization. Wall Street is laying the pipes. Ripple is providing the bridge. XRP is aligning as the settlement layer. Retail won't see it until it's too late. The big picture. The institutional gold rush isn't about tomorrow. It's about today. BlackRock, JPMorgan, Citi, and Ripple aren't waiting. They're building. Tokenization isn't in the future. It's already happening. And when trillions of tokenized assets begin to move, they'll need liquidity. They'll need interoperability. They'll need the bridge. That's XRP. And what comes next? But this story doesn't end with banks and institutions. The true power of tokenization will reshape everyday life. From how you buy a home, to how you invest, to how you interact with digital economies. That's where we're going next, the future of everything on-chain. A world without borders, without delays, without paper, and at the center, XRP quietly doing the work. Stay tuned for Part 5, where we paint the vision of a fully tokenized world and how XRP becomes the invisible backbone of the financial internet. Part 5, the future of everything. On-chain, close your eyes and imagine the world 10 years from now. You wake up, and every piece of value you interact with is digital, tokenized, and moving at the speed of the internet. Your paycheck arrives instantly as a tokenized salary credit. Your mortgage is a fractionalized digital contract that updates in real time. Your investments, stocks, bonds, commodities, trade 24/7 with no settlement delays. This isn't sci-fi. This is the world tokenization is building, and it's closer than most people realize. Everyday life in a tokenized world, in a fully tokenized economy, the barriers we take for granted disappear. Real estate. Instead of dealing with weeks of paperwork, buying property is as simple as a digital transfer. Ownership tokens prove who holds the deed. Instantly verifiable, impossible to forge. Stocks and bonds. No more T+2 settlement. Trades finalize in seconds, unlocking trillions in trapped liquidity. Supply chains. Every step from raw materials to the final product tracked on-chain, reducing fraud and inefficiency. Intellectual property. Royalties, music rights, and patents tokenized, ensuring creators get paid in real time. Everyday payments. Micropayments flow between devices. Your car paying a toll booth, your smart fridge restocking itself, your solar panels selling excess power directly to the grid. It's the Internet of Value, where ownership, trade, and settlement happen seamlessly across every industry. Or why it matters. The shift to tokenization isn't just about speed. It's about trust and inclusion, transparency. With transactions on-chain, corruption and fraud become harder to hide. Accessibility. Fractional tokens open investment in assets once reserved for the wealthy. Real estate, fine art, corporate debt. Efficiency. Billions of dollars saved in fees and middlemen, with those savings passed down to businesses and consumers. Global reach. A farmer in Africa, a startup in Asia, and a bank in Europe all interact on the same rails, instantly. This isn't incremental progress, it's a complete restructuring of how value moves. And where XRP fits but here as the critical piece, tokenization alone does not create a global system. Without interoperability, tokens remain stuck in silos. A tokenized bond in London won't talk to a tokenized stock in Tokyo unless there's a bridge. XRP is that bridge. Neutral, fast, scalable, ISO 2022 ready. It connects CBDCs, tokenized assets, and everyday payments into one seamless web. A digital euro pays for a tokenized US bond. A real estate token in Dubai settles against a carbon credit token in Brazil. A micropayment between two IoT devices flows instantly across borders, all powered by XRP liquidity in the background. Invisible to most, but indispensable to all. The internet parallel. Think about the early internet. At first, websites were isolated islands. You had to know exactly where to go. Then protocols like HTTP connected everything. And suddenly the internet became unstoppable. Tokenization today is at that same crossroads. Isolated projects, disconnected pilots, fragmented systems. XRP is positioning itself as the HTTP of value. The protocol that bridges every token, every asset, every currency. On the big picture, the future isn't paper. It isn't even digital databases. The future is tokenized assets flowing across neutral rails at internet speed. And XRP isn't here to dominate headlines or hype cycles. It's here to quietly power the plumbing of that future, to be the bridge that makes the system work. When trillions in value move across borders, when ownership becomes digital and global, when everyday life runs on tokens, XRP will be in the middle doing what it was built to do. We know what comes next. We've walked through the end of paper wealth, the $100 trillion opportunity, why XRP is uniquely suited for it and how institutions are already positioning. Now we've envisioned the borderless future that tokenization enables. There's just one final step, pulling it all together. Because when history looks back, they won't just remember the technology, they'll remember the moment money itself was redefined. But stay tuned for the outro, the 100 trillion shift, where we tie the entire journey together and reveal why XRP could be remembered, not just as a coin, but as the backbone of the financial internet. Outro, the 100 trillionaire shift. We've traveled through the cracks of paper wealth. We've seen the scale of the $100 trillion opportunity. We've broken down why XRP is uniquely built for tokenization. We've exposed the institutional gold rush. And we've envisioned a future where everything, from real estate to royalties to carbon credits, flows seamlessly on-chain. Now it's time to step back and see the whole picture. Now, the death of the old system was built on paper. It was slow, opaque, fragile. Settlement delays froze capital. Middlemen extracted endless fees. Fraud hid in the shadows. For centuries, the global economy tolerated inefficiency because there was no alternative. But those days are over. The paper era has run its course. The birth of the new tokenization is the next evolution of finance. Not just digitizing money, but digitizing everything of value. Stocks, bonds, commodities, real estate, intellectual property, all represented as digital tokens that can be owned, transferred, and settled instantly. This isn't a small shift. It's a structural transformation on the scale of the printing press or the internet itself. For the first time in history, ownership becomes as fluid as information. The bridge that makes it work, but tokenization by itself isn't enough. Tokens without interoperability are silos. A tokenized stock is useless if it can't settle against a tokenized bond. A digital euro is limited if it can't move against a digital dollar. That's why the story of tokenization is incomplete without XRP. Neutral, fast, scalable, ISO 2022 ready. XRP is the bridge asset that connects every token, every CBDC, every currency, every market. It doesn't compete with tokenization. It makes tokenization possible at scale. Just like the internet needed HTTP, the financial internet needs a universal connector. XRP is positioning itself to be that connector. And the institutions are already here. This isn't a dream for tomorrow. BlackRock, JPMorgan, Citi, and Ripple are building today. Tokenized funds, tokenized deposits, tokenized collateral. Billions are already flowing through pilot programs. The rails are being laid right now. By the time the public catches on, the infrastructure will already be built, and XRP will already be at the center of it. And the final word, the 20th century, was defined by the dollar. The 21st century will be defined by digital rails, and XRP may be remembered as the silent engine that made it all work. This isn't hype, this isn't speculation. This is the biggest financial transformation in history, a 100 trillion shift that will touch every market, every asset, every life. When history looks back, they won't just remember the end of paper wealth. They'll remember the moment everything became tokenized, and they'll remember the bridge that held it all together. XRP isn't just a coin. It isn't just another crypto. It's the backbone of the financial internet. It's the bridge to the future of money. Like, subscribe, and share, because this is just the beginning. The future of finance is unfolding now. And here at LTL Productions, we'll keep exposing the truth behind XRP, tokenization, and the new financial system. This is not financial advice. Do your own research.